I think your base assumption should be the future is more grindy than it is God candles. I think that is what happens when you get this large explosion in the derivatives market. I would also just add, you mentioned it. I mean, we're above $5 billion of inflows into Bitcoin ETFs this month, and it's very early. That puts us on pace for this to be by far the best month for Bitcoin ETFs. I think we're going to see record flows. They do more flows year two than year one, more flows year three than year two. Eventually we'll get to, $100 billion flow year. I just don't see any reason to expect that to slow down. I'll point out something so obvious, but people overlook about ETF flows. If you ask any Bitcoin investor, did they buy all of the Bitcoin they hold today the first time they bought Bitcoin? The answer is no. So even just the people who bought it last year are probably going to buy more than they did last year, this year, and then more again the next year. That's what we all did. So I think it's a one-way train.
Matt Hougan starts off by underlining an important message directly from the markets. The hard asset trade has officially arrived, and the era of fiat money strength is waning. The same pattern is seen in gold, silver, Bitcoin, and Ethereum. Investors are shifting their focus from declining currencies to assets with genuine, long-term worth. Hougan notes that this is a coordinated reaction to the global surge of money creation, debt expansion, and inflation concerns rather than merely a cryptocurrency rally or commodities boom. He refers to the emergence of Ethereum and Bitcoin as the digital mirrors of traditional safe havens, comparing them to gold and silver. These assets are becoming the foundation of a new monetary order as trust in currency systems declines. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Yeah, I mean, obviously the world is screaming at you that the debasement trade is real and it's happening. And we're getting this alt metal rally, which you called out, Scott. I think absolutely that spills over into Bitcoin, that spills over into Ethereum. I think it's going to lift those markets.
Digital silver.
Well, you said it. I'll let you say that.
You've learned.
I will say, one reason I think this is just going to accelerate into year end, at least for the audience I serve, is the audience I serve loves to paint their portfolios at year end. They want to sit down with clients and show them that they held the hottest trade of the year. Last year, they all bought NVIDIA at the year end because they wanted it on their end of year statements. This year, they're all going to want to own gold, Bitcoin, silver, Ethereum. I think you're going to see those flows accelerate. We're seeing that in Bitcoin ETFs, as you hinted at. So of course, yeah, the debasement trade is the trade of the quarter, and you ain't seen nothing yet. Yeah, I think that's really true. I think your base assumption should be the future is more grindy than it is God candles. I think that is what happens when you get this large explosion in the derivatives market. I would also just add, you mentioned it. I mean, we're above $5 billion of inflows into Bitcoin ETFs this month, and it's very early. That puts us on pace for this to be by far the best month for Bitcoin ETFs. I think we're going to see record flows. We just turned on Morgan Stanley. Wells Fargo is gearing up. Those are big pools of assets. I posted yesterday or a few days ago on X, I think this will eventually get to be $1 trillion ETF category. And I don't think that's absurd. We're at a couple $100 billion now. I think price is going up, flows are accelerating. I do think this will be $1 trillion category. They do more flows year two than year one, more flows year three than year two. Eventually we'll get to, $100 billion flow year. I just don't see any reason to expect that to slow down. I'll point out something so obvious, but people overlook about ETF flows. If you ask any Bitcoin investor, did they buy all of the Bitcoin they hold today the first time they bought Bitcoin? The answer is no. So even just the people who bought it last year are probably going to buy more than they did last year, this year, and then more again the next year. That's what we all did. So I think it's a one-way train. I mean, I think the thing I've been thinking about on this government side, what this story is talking about is that these governments have all seized Bitcoin. They're going to convert them into reserves. This has happened so many times in crypto's history where people are skeptical of a category of crypto investors. They were skeptical of financial advisors. They were skeptical of hedge funds. They were skeptical of pensions. They were skeptical of endowments. They're skeptical of governments. And then time and again, what we see is there's a few early pioneers and they follow this exponential growth curve. And then you wake up, and today, many financial advisors allocate, many family offices allocate, many hedge funds allocate. Endowments and pensions are further along that curve. They're now, Harvard is allocating. It's not rare, but it's not common. governments are doing the same thing, right? A similar story. We saw Luxembourg make an allocation from its sovereign wealth fund. I see no reason to imagine the growth in government holdings of Bitcoin aren't following that same exponential growth curve that we've seen in every category of investor. I just don't understand where the skepticism come from. And I think, next year we're going to see purchases by, I don't know, a dozen countries. I don't see why we would imagine we would get anything but that looking at the track record. My view of it is that the market is pricing that possibility at zero. And I don't think the possibility is zero. So I think it's a positive catalyst. On my screen right now is another article from Bloomberg. Gold's rally is helping China build a world less dependent on Trump and the dollar. I think there's a possibility that those sort of headlines push the administration into acquiring Bitcoin as an alternative. I don't think that's a zero chance. It may not be the base case, but I do think the market is writing it off to zero. And that's been, there's that story. You can imagine the administration looking at that shining, glittering picture and the word China and wondering how it's going to take a run at this. I don't think that's a crazy conspiracy idea. So I think the probability that we buy Bitcoin is significantly greater than zero. Maybe it's not the base case, but I don't think it's priced in at all into 100.
Way higher than zero and completely not priced in.
Hougan also discusses the difficulties the ETF sector encounters, particularly in situations like a government shutdown in the United States. While some ETF types can proceed automatically, the majority require direct correspondence and SEC clearance. He draws attention to the irony that the government shuts down just as these products are about to launch, after 15 years of waiting for clear legislation regarding cryptocurrency ETFs. Hougan remains hopeful, though. The shift to regulated cryptocurrency investing is unstoppable due to the robust demand and prepared structure. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
That's really right. The other thing I would say about that chart is you could continue those lines back for 5,000 years. And the reason I say that is that the period that we had where treasuries were above gold is really anomalous. Right? I think it's like a fiat blink. We've all grown up in it. That's been our lives. So we think that is normal. I think it's the case that is not normal. We're returning back to normality. That's why I think that line is going to continue to stay above on the gold side for a very long time. I think it's a one-way move. I don't think we're going back. That was an odd window we just all happened to grow up in. But I think it was the anomaly. We're back to the normal. For what it's worth, there are some investors that for interesting tax reasons don't necessarily want to stake. And I think you may see non-staking ETFs as well. There'll be a fraction of the size of staking ETFs. But do you want Solana staking yield or ETH staking yield along with your Solana or ETH? I do. So I think we're going to see people do that. I think the first part I definitely agree with. The percentage of assets that are staked will significantly go up, right? You think about what BlackRock and others have done on the Bitcoin side. You look at the flows into Ethereum ETFs, they're clearly accelerating. So a lot of those are going to be locked up and staked in a way that they weren't necessarily in the past. How much that influences inflation, I think I'll leave to the Ethereum experts and how dynamic that relationship is. The beauty of crypto Twitter is I've been called a Bitcoin shill, an Ethereum shill, a Solana shill. Last I looked, they're all up massively over the last 5 years. So maybe I'm just an investor. Yeah, you've
Bitcoin maxis call me a shitcoiner, and shitcoiners call me a Bitcoin maxi. It's an incredible needle to thread.
Matt, can I ask for your elevator pitch? Tom Lee's claiming that Ethereum is the Wall Street. What's your elevator pitch for why it's Solana?
Well, the real truth is I don't know which asset will win. Ethereum has the dominant position, the dominant share of stablecoins and tokenization. It has the best shot on goal, but Solana has an incredibly compelling technology that which processes transactions in a blink of an eye. It's the challenger asset, and it is architected to serve that market. The way I invest in it is I own both of them. I think the market is so huge, I think they will both win. But Ethereum is the dominant player, Solana is the challenger. The thing about the Solana that's really attractive right now is it's 1/5 the size of ETH. And as institutions start rotating into the stablecoin and tokenization trade, I think they're going to buy both. And money buying both will have a greater impact on a smaller asset. It is the most crypto thing ever to wait 15 years to get generic listing standards that let us launch ETH and then have the government shut down for an interminable period. I mean, you really couldn't have written that script. The answer to your question, Scott, is nuanced. There are some ETFs in traditional wrappers that can go auto effective, or that can move forward toward launch without official government blessing, but most of them require work. So things like crypto equity ETFs can continue to march forward, but many of the other ETFs require back and forth with the government. And it's not that it's impossible to get things to launch, but it sure is a lot easier and a lot less risky for issuers if it can go back and forth with the government. They can't come back and say, you should have made these disclosures, etc. So it complicates our lives. I sort of can't believe it.
Matt Hougan covered a wide range of topics, including ETFs, staking, and the overall development of cryptocurrency investing. He started out by stating that the majority of investors wish to stake their money in order to get rewards by supporting safe networks like Solana or Ethereum. Since investors will inevitably want to generate income on their holdings, Hougan thinks we'll soon see ETFs that permit staking for almost all of the main cryptocurrencies. He anticipates that these non-staking ETFs would continue to be significantly smaller in contrast, even though some investors might choose not to stake for tax reasons. Additionally, he pointed out that institutional interest is growing, drawing comparisons to how large inflows into Ethereum and Bitcoin. ETFs are hastening adoption and decreasing supply through staking. Hougan provided a fair and practical response when asked which blockchain, Ethereum or Solana, would prevail. He stated that both have great promise, but he is unsure who will prevail. With its network of tokenized assets and stablecoins, Ethereum is in the lead, but Solana is the challenger in this race because it provides quicker and less expensive transactions. The absurdity of U.S. cryptocurrency legislation was another issue Hougan made. The government risks possible shutdowns just as these goods are about to launch, after over 15 years of waiting for clear ETF certification rules. He clarified that shutdowns are a bothersome barrier because most ETFs require SEC communication, even though some can proceed automatically. He is upbeat despite these regulatory obstacles, stating that institutional demand is already growing behind the scenes, and that regulated cryptocurrency goods are unavoidable. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.